Hi guys, welcome to my YouTube channel. This is Amber FX right here. Today we want to look at the weekly review for the upcoming week. So last week, fundamentally checking the forex factory, we see that we have a lot of fundamental reports last week that shape the market, that makes the market move, like that bring volatility to the market. The first one it starts on Monday, the AUD monetary policy, um, the Japanese yen monetary policy, and the one that shaped the market the most is the flash manufacturing PMI, the euro-based news, which this indicates, you can call it recession indicating news, because the result came out negative, like it came out lower than expected, and we really saw the impact in the market last week. Euro AUD, Euro JPY, Euro Swiss franc, all of them retract from their upward move to the downside. Like, we have a very massive move to the downside next week. So coming up to this week, so what are we looking at? Let's check the fundamental analysis for this week. So I think the most important news for this week should be the Fed news. So which is on Wednesday, and then Thursday we have the GDP news. This is a very crucial week, and we have a lot of volatility. But I think the volatility we start having the volatility on Wednesday, and from Monday, Tuesday we'll just see some retracement in the market. Maybe market will make some correction, but as from Wednesday, Thursday, Friday, we'll see a high volatility to the market, because they want to increase the interest rate by 75 bps. The previous one is 1.75%, and the forecast is 2.50. So if we now see the actual maybe lower than expected, we should see a very sharp decline in United States dollar. Then if you see the higher than expected, that is we have to see a stronger dollar. Then in advanced GDP, the previous GDP is minus 1.6%. That is this is a recession GDP. So I think they want to shape US out of recession by bringing their GDP to 0.4%. So on Thursday, if we see this result, it should have an impact on the US dollar. And if you see something like lower than forecast, then USD should smell recession. So, and then on Friday we have Canadian dollar GDP. So that one will shape the price as well. So let's go to the actual chart and see what we have on ground. So this is US dollar index. So we see a sharp decline, like after it went to the all-time high at 109.254. So we see a sharp 5 to 6 day decline. 1, 2, 3, 4, 5, 6. That's 6-day decline. So checking at the technical level, we can still see more decline to the downside, because at this area now, if we zoom it very well, we can see something like head and shoulder there. If we go to the let's go to the let's say 4-hour time frame, we should see something like head and shoulder at that particular area. Let me zoom it. If we zoom it, so let me indicate it so that you can see it very well. Head and shoulder, you see. So we should see a sharp decline to that particular level, as you can see. So let's eliminate this. So we should see some further decline in DXY. And then if it's going to prove us wrong, then we should see a break of this particular level. If you see a break of this level, then a retest, then we should see a break of this all-time high to the upside. So let's keep watching what the market will do in response to that. So the first pair we are going to check is Euro USD. So from Monday upward, like I said, from tomorrow we can see a move to the upside, because markets will correct from Monday. We made some correction from Monday, Tuesday, then Wednesday. Before or after the news, we can see some volatility diving into the forex market. So the first thing we should be expecting Monday, Tuesday, we should expecting a correctional bias to the upside to this particular level, because this is a particular a very strong resistance level. And then if anything warrant it, we can see a break to the upside or a sharp decline to the downside. So it depends on the outcome of the news. That's what will tell us maybe we have risk on or risk off. And then if you want to do this thing on a two-way level, we should let's zoom it so that we can see it very well. So let's say this is trapped in a rectangle. Let's say this is trapped in a rectangle, and then if we see on Monday, if you see a sharp decline to this side, let's say we see a move to the downside, let's say we see a move to this side, then it breaks this level, then all you have to be waiting for is a retest to the what, to the downside. But for now, the bias still remains that it will do what, it will rally to the upside. It will rally to this particular resistance level before we see a breakout or a sharp decline. But if we see on Monday, if we see a break to this downside, then we should know that you should see a retest, and then this is the target right there. The target at 0.9590. So let's see how it goes on the Euro USD. So let's check out the Euro AUD. On Euro AUD, and we saw a breakout of this range from last week, and then we took the trade and it's our target. So we are still bearish on Euro AUD. So the reason why I say we are still bearish, if you look at it very well, you can see that we have a break of this level. We have a break of this level right here. As you can see, it has break that particular level, so it's coming for retest. So any movement to this side is an opportunity for us to look for a bearish setup. So any movement to this particular side is an opportunity for us to do what, to look for a bearish setup to that particular area. So for now we are bearish on Euro AUD. So you just have to find your entry around here. So all our bias still remain bearish till further notice. So then our next pair we want to check is Euro Swiss franc. So we are still bearish on Euro Swiss franc. So any retracement to the upside, like any retracement to the upside, any retracement you see to the upside is an opportunity for us to watch, to look for bearish setup to this particular area. So any opportunity you see to the upside is an opportunity for us to watch, to look for a bearish setup, because if you check this place very well, we can see the formation of you know, this is a resistance right here on its own. So you understand, and this is a supply level right here. This is a particular supply level. You understand? Pardon the drawing. So we might see a retracement to this side, then we'll see a decline to this side. Just find your entry around there, around that particular area, because any opportunity will see until if you are in a bullish bias, then you should wait for this particular uh, trend line to break to the upside. Then you know how you maneuver your way to this particular side. So any opportunity with any retracement to sit to the upside is an opportunity for us to sell to 0.97360. That's our target right there. So the next pair for us is JPY, Euro JPY. And if you check the daily time frame, because last week we saw that the manufacturing PMI, it came negative for euro. This is a very bad news for the euro currency, so which tells us that we might have a decline of euro for the next couple of weeks. So any retracement we see to the upside like this is an opportunity for us to look forward, to look for short, and this is our target on euro JPY. Because after rejecting from this supply level, so we have the break of the trend line. So we have this area, we have this area, then we have the break of the trend line, we have a retest, then it will reject from this particular retest level after sorry. So it rejects from that particular reject level after forming a long what is it called, after forming a hammer candle, that is a rejection candle at that particular area, because we see a very long weak rejection candle from this area and from this area, which tells us that this area is area of a supply level and a very strong resistance area. So saying that sorry, so what we are now looking at is that any retracement to this side, like any retracement to the upside, because from what we see on euro fundamental, like on the PMI that dropped on Friday, tells us that probably this week we should see a weaker euro. We should see euro pair to the what, to the downside. So any retracement to the upside will give us an opportunity to what, to look for bearish setup. So if you are on a bearish bias, so you just wait for this particular supply to what, to break out, and you just wait for this all-time high to what, to invalidate, like this this solid resistance. Just wait for it to what, to break out to, before you do what, before you can make your decision to go long. So for now, all the bias we have now is a bearish bias. That's that about euro JPY. But mind you, let me remind you that we have a false target here. So any retracement to the upside, if we see a bearish bias, let's say we enter at something like this, we use a trend line for our entry. Let's say we enter here, so let me increase the visibility. So let's say we see a retracement to the upside, then we now see a sharp decline here. So here we should see our first take profit here, and our last target should be here for the week. So the next way we want to look at is Dbp Us Dollar. So we can see that we have on Dbp US dollar, we saw a very big sharp decline uh, on on Dbp USD. Sorry. Then we now see a break of this particular trend line, which invalidates this demand level. As you can see, this is a demand level, so it invalidates what it invalidates it. So it's come to this so initially as it break this level, we should have seen a retest and then a rejection, but we see something contrary to that. After it break this level, and then we see uh it come back to that level, it break the level up again, like it break that particular resistance up. Then we saw a retest to the trend line. So this tells us that prior to Monday and Tuesday before the FOMC, we should see a retracement to the upside to this particular level, because if we check, this particular level is also is a level of resistance, and it is a very strong level. This level right here is a very strong level of resistance, so we should see a move here. Then when the what is it called, the FOMC, when they drop their thing, and then when the interest rate is dropped, so we can see where the market will go from there, because the news will determine the directional bias of the pair of US dollar, of the market generally. So for now, what we are looking at is that we see a move to this side. After it break this particular level, we still see a move, it still break it, and then if we check the 4-hour time frame, we should see something like inverse head and shoulder in this. Okay, we can see very clearly that there's inverse head and shoulder. So this tells us that we might see a move to this particular area. Even you can see a move to 1.22813 before we see a break of that level or a sharp decline to the downside. And before you make your decision, if we zoom it very well, you can see that the OPA is still down. Our bias should be downtrend. Hope you understand. Our bias should be what is it called? Our bias should be on the downside. But if you check this level very well, if you see a breakout of this particular leg line on Monday, you can go for long after a retest. Like if you see something like this, if there is a breakout and if there is a retest, you should do what? You should go for long to that particular area. Okay, let me delete this so that it won't confuse you. So if you see a breakout of this neckline, then you can wait for a test and go for long. So this is the first bias before the FOMC or the GDP on Wednesday. So this ones might comes on Monday and Tuesday. We might see a breakout of this on Monday, then we'll see a move to that particular side maybe Tuesday and early Wednesday. Then anything can stop from Wednesday afternoon, evening. So the news will make impact in the market, and we'll see very volatility in the market in the coming week, especially Thursday, Wednesday, and then and Friday. From prior to Monday, if you see a breakout of this neckline, you wait for a test and do what, and then you enter with a good risk to reward ratio. So that's that about DBP US. So the next pair I'm looking at is New Zealand dollar and then US dollar. So the same thing I saw on DBP USD. I also saw it. I also see it on the SND USD. So something like this, we saw a breakout of that particular of this trend line because if you check very well, price has been respecting this trend line from this area. We see a respect of the trend line at this particular area. Then you see the respect of the trend line here. Then what do we see here? We see a breakout. The breakout is not that visible enough. It might be a false breakout. Don't freak out. This can be a false breakout and it can break in back. But another things that make it confirm that it might not be a false breakout is this level right here. You know, we have a breakout of this particular level, of this particular support. Hope you understand. So we should see something like this to this trend line, then we should see a sharp decline to this particular target level. But it did something contrary to that. It break back into that particular area. If you see it very well, you can see that we have a break in to that support. You know, that support on resistance, and it breaks into that resistance again, and then we might see a upward movement to this next resistance level. Hope you understand. So this coming where you can see the upward movement to this level because we have a breaking of this particular support that turns resistance back. And then if we zoom it very well, we can see that we have a as you can see, we have a break in to that particular level. So if you are on bearish bias, you have to wait for it to break into this particular level back. Then the target should be 0.59 0.59328. You understand? But on a bullish bar now, temporarily the bias is bullish until they release the interest rate. Maybe they are going to add 75 bps or not, so let's wait till then. But Monday, Tuesday, we might see a move to the upside. We can see a move to this side first, then we see a move to 0.653, on which we don't lose guard. Just find your entry because now the bias temporarily changed towards to bullish. You can have a bullish bias there, and then to be on the safer side, we can just at the opening of the market, we can long at this area, then we'll put our stop loss. This is 1:5.9. It's not up to 1:2. Then you just do your thing like let's see how many pips here. 65 to, so it's down to like now up to 50 pips. So just do your thing right there then. But if you're on a bearish bar, you have to wait for this level to break back, so that it will tell you that okay, this is a forced breakout. Hope you understand. Then for now the bias still remain well. The bias still remain bullish. So I think the last pair we'll check here is SZD card. The last pair we check is SND card. For now, for SND card, my bias still remain bearish. My bias still remain bearish because this level is still holding. We can see the level of resistance holding right at that particular time. So any retracement to the upside like this without breaking this level will serve as opportunity to what, to look for a bearish setup. But don't look for a bearish setup without a break of this particular level, because just wait for it to come here, and if it break it, then you look for what, you look for a bearish setup. I hope you enjoy this setup. Please, if you really enjoyed, click a thumbs up button and subscribe for me, so that you can compel me to do more of this in future. So thanks for watching. Have a good trading week.